Tesla continues to be one of the most valuable companies in the world, having a $1.2 trillion market cap as I'm recording. But the reality is the company's vehicles are not actually selling that well. Sales were down in both Europe and the US in 2024. The only area of growth was actually in China. And it looks like, based on early data, 2025 is not going to be much better. Early sales information coming from Europe is showing declines of up to 60%. Now, there are a couple of caveats here. They are updating the Model Y, so that could mean that they're flushing out the inventory that they have, may have a little bit low inventory in certain locations. But it certainly looks like demand for vehicles is not what you would expect from Tesla. Now, this has a number of ramifications from impacting their revenue and margins. Both of those things are likely going to be hurt, at least in the first quarter. But the other thing is they have all of the regulatory credits. A lot of those are coming from Europe. So if they're losing market share in Europe, losing market share in the US, that is going to hurt everything for Tesla. At the same time, FSD is supposedly on the way. And the theory with FSD is they're going to have more vehicles on the road to have this autonomous driving technology to build out the robo-fleet network. If you have fewer vehicles on the road, that's not really going to work. So I'm going to dig into exactly what we know so far about the company's performance in 2025. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to the early data. Now, this is some reporting from Bloomberg. I'll get to some more data from other countries, but the big number was a 63% decline in the number of registrations in France. Just a huge drop. Electric has actually pulled all of these together. UK sales fell 18% in the month of January. France down 63%, Netherlands 42%, Norway 40%, Spain 75%. Overall, all these countries down almost 50% from a year ago. This is some aggregated data from Troy Tesla, who has great information about the company's sales. And the reason this is important is the decline in Europe is continuing a trend. So in the US, 655,000 units in 2023. That's down to 618,000 units. In Europe, 365,000 units a year ago. That was down to 326,000 units. Like I said, the only area of growth was Canada. If you want to count that as its own unique market, that potentially isn't going to be the case, especially with all the tariff drama that's going on right now. But China was the one area of growth that Tesla had. We also know that Tesla's most important market in the US is also struggling. This is sales for zero-emission vehicles by make in 2024. So registrations for Tesla down almost 12% to 203,000. That is just in California. California is a massive, massive market for Tesla, far outweighs every single other market. Look at the growth in some of these other brands. Hyundai up to almost 23,000 units, Kia up 74% to almost 14,000 units. Mercedes up 10%. Nissan up 27%. Market share is also slipping. Tesla's market share declined 7.6%. And it's actually fallen below 50% in the US overall. Now, this is important because it impacts Tesla's biggest business. Automobiles is still the company's biggest business. I know that everybody wants to say that Tesla is now an AI or robotics company. They don't actually sell any robots. And they don't sell much FSD. Elon Musk said that on the most recent conference call. Good thing that people weren't buying FSD. So revenue is down 8% in the quarter, in the fourth quarter. Potentially going to be down even more in the first quarter of 2024. That was actually a pretty low quarter a year ago, but could be another bad quarter based on what we see early in Europe. But here's the other number. Auto regulatory credits, $692 million in just the fourth quarter of 2024. This is revenue that's coming from both the US and from Europe. Tesla is the one electric-only automaker, so they're able to sell these credits to other companies that don't make enough EVs to meet their regulatory requirements. Now, if you're losing market share and all these other companies are taking market share, those were your customers for these EV credits. They now potentially don't have as much demand for those EV credits in the future, especially if your sales overall are declining. We also have seen margins decline really rapidly for Tesla's auto business. So all these things are working against the company actually making a profit. And that's where, look at this, earnings per share down sharply from a year ago. So $2.49 on a basic basis, $2.27 on a diluted basis, diluted down to 66 cents in the most recent quarter. That actually includes a bunch of gains from Bitcoin. Obviously includes these regulatory credits, and that's not even to mention the subsidies that they're getting for making batteries and selling energy storage units in the US. They don't actually disclose a lot of information about that, despite that it's likely billions of dollars per year that they're getting, particularly for the production tax credits for making those batteries and cells in the US. And any changes that we're going to see in 2025 likely going to have massive impacts for Tesla. So if the business is in decline, that's where investors need to look at what the valuation of the company is. I know that this hasn't mattered for a long time, but eventually if the business continues to decline, and Tesla has been in a structural decline in their electric vehicle business since the end of 2022, that's when margins really peaked. This is eventually going to matter for the stock. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, so far, this decline in the business has not really mattered to Tesla stock. Like I said, the company currently has a market cap of a little over $1.2 trillion. But the rubber is really going to hit the road when we get to something like FSD. Elon Musk said that that was going to be operational in Austin in June of this year. Now, I don't think that's going to be the case at all because they're not even testing full autonomous driving with a safety driver or anything like that. So we don't have any information to say that they're going to have commercial operations on the road this year, much less in June. The other thing is if the fleet is shrinking, if Tesla is not making as many vehicles, not selling as many vehicles as they were a year ago, that's really bad news because ultimately Tesla wants to sell software, wants to sell FSD software as a service, wants to run this ride-sharing network. It doesn't want to actually make vehicles. I think that's become clear. And we got a couple of data points out of the most recent conference call. Elon Musk said when referring to the fact that they may have to upgrade the hardware of vehicles with hardware 3 to hardware 4 or hardware 5, said, good thing that we didn't sell many FSD units to those customers. That's giving away the plot. Tesla is not actually selling much FSD. He also said when referring to licensing FSD to other automakers, said, you know, if you're interested in this as an automaker, why don't you just tear apart a Tesla rather than bothering our engineers? And by the way, we need to figure out full FSD first. That's not the way that you plan vehicle production years in advance. The vehicles that are going to be produced in 2027, 2028, those designs are being completed now. So the companies that are providing hardware and services for those companies are working on their plans, signing contracts. That's not what Elon Musk and Tesla are doing with FSD. So there's really no reason to think that they're going to license FSD anytime in the future to any company. Add all of this up, and I just think Tesla's business is going to be declining throughout 2025, just as it's been declining since the end of 2022. Will that matter for the stock? Very possible that it won't. But I still continue to think that eventually a stock's valuation is more about what the business is actually doing. And if that's the case, Tesla potentially has a long way to fall. Current price to sales multiple for Tesla stock, 12.4. A traditional automaker trades for about 0.3 times sales. So that means that just on that one metric, Tesla stock is overvalued by about 40x. Now you may say Tesla has better margins. That's not really the case anymore. Tesla's margins are about industry average today, and it doesn't look like they're heading in the right direction either. So take this as a data point with Tesla. I think the potential loss in sales in Europe, the increased prices in Canada, the trade war, and Elon Musk being a very central piece of the current administration, all that's going to likely work against Tesla in 2025. So something to think about as an investor. Let me know what you think about Tesla's position today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.